Hello guys, you are welcome to this new lesson. Today we are going to discuss one exercise under the manufacturing account. Okay, under the manufacturing account we are going to discuss one account. Right here, the question says the financial year of uh, Doship Manufacturing Company ends on 31st of January. The following trial balance was extracted from books on 31st of January 2017. Sorry, 31st of December. No, 31st of January. Okay, January 24. Right. Inventory on 1st of February 2016, right? Inventory, that means opening stocks. They have given the opening stocks. Okay, and everything is there, and we'll go for the adjustments what they have said in the adjustments. In the following additional material information is available. 31st of January, raw materials 41,000, right? That they have given, and wages and accrued wages, value of losses, loss on tools and those things. The factory machinery is being depreciated at 20% per annum on reducing balance method. The office equipment 15% annum straight line. The loss tools are valued at the end of each financial year. Right, the general expenses are to be apportioned at 3/5 to the factory and 2/5 to the office. Right, the raw materials, closing raw materials, right? We can enter into that. Inventory, closing raw materials, purchase of materials, closing raw materials, closing raw materials are here, right? How much? 41,100. 41,000. 41,100. Right? This has to be deducted. Right? And under the current assets, we had the closing stocks. Closing stocks. Stocks. Raw material. Raw material. How much raw material? They have mentioned 41,100. 41,100, right? Raw material. So double entry has gone for the raw material. Factory overheads, and we had to say sales here. Sales, and thereafter can say opening finished goods, right? Opening finished goods, right? Add cost of production. How can you say cost of finished goods, right? Finished goods, right? Thereafter we can deduct less closing stocks, finished goods, goods. How much finished goods cost? 59,100. 59,100. Finished goods, raw material, finished goods. Goods. Finished goods 59,100. 59,100. Okay. 100. Right. Closing sales, cost of finished goods, right? This is the cost of finished goods, right? Here closing less closing work in progress, right? Closing work in progress 31,250. 31,000, 31,250, right? 31,250, right? You had to mention here, right? Less closing stock work in progress, right? That is 31,200. 31,000, 31,250, right? Okay. Here you will say work in progress 31,000, 31,250, right? And wages accrued, factory supervisors 12,000, office staff 4,300. Wages, the closing stocks, and we'll say after deducting the closing stocks, you will get the gross profit. Gross profit. Gross profit. Here in the gross profit, you can add other income, right? Other income in the admin expenses, less admin expenses, administration, under the administration expenses, you will get some expenses. That is factory supervisors wages accrued 12,000. Wages accrued expenses, current liabilities, right? Accrued expense, right? That is office staff wages. Okay, wages how much? 12,000 plus 4,300. Supervisor and office staff, right? That is 16,300 activity expenses, right? Yeah, it has to go factory overheads, wages, direct labor, office staff wages, wages, office staff, right? Office staff, you put what you call 4,300 here. 4,000, 4,300, 4,300, right? 4,300 office staff. And factory supervisors, factory supervisors, how much? 12,000, 12,000, right? Okay. And value of of tools, loss of tools, value of loss of tools, 19,950, value of loss of tools. Tools account, open a tools account, tools, right? Tools account, you say brought forward balance, carried down balance. Here they will say loss. Loss how much? 19,050. 19,050. This goes to P&L or manufacturing account. Manufacturing account, right? So we have to balance it. Manufacturing account, loss of tools. Loss of tools. Of tools. 19,050. 19,050. Yeah, we have put it there, right? So first adjustment is over. Second adjustment, factory machinery is being depreciated at 20% per annum at diminishing balance, right? So factory overhead, factory machinery. Where is the factory machinery in the trial balance? Factory machinery depreciation 1st January, right? Depreciation account, open depreciation, that is not needed actually. 100 and provision brought forward, is 122,000, right? 122,000. Machinery provision, machinery provision, office furniture, right? Office equipment, provision, office equipment, equipment, brought forward, brought forward, right? 32,400, 32,400. Okay, 32,400. And factory machinery cost is factory machinery, factory machinery, machinery, right? And office equipment, office equipment, equipment, right? This is machinery is 250,000 and equipment, factory equipment is 72,000 cost, right? 72,000 cost, right? Machinery cost is 250,000, right? 250,000 minus 122,000, right? Into 25,600. 25,600, right? Depreciation, right? Here we will say depreciation. Depreciation, machinery. How much? 25,600, right? 25,600. Here you will say 147,600, right? 147,600. Okay. On the what you call office equipment, what is the rate? Reducing balance method and 15% on straight line method into 10,800. 10,800. 10,800 depreciation. Depreciation office equipment. How much? 10,800. 10,800. Right? So here 243,200. 43,200. Right? That is also finished. So what else to be done is third adjustment. Office equipment a 50%, that is also done. The lost tools are valued at the end of each financial year. The general expenses are to be apportioned 3-5. General expenses expense 3/5 and 2/5 has to be apportioned, right? Opening raw materials 49,500. 49,500. Okay. And work in progress opening. Work in progress. Work in progress. Opening stock. Work in progress equal to how much? 28,700. 28,750. 28,750. Finished goods 63,100. 63,100. Right? 63,100. Opening finished goods. Revenue, that is sales, or we can say revenue. Revenue 1,246. 1,246. 850. 850. Okay. And return inwards. Return inwards less. Return inwards less. Return inwards. Right? Return inwards 12,250. 12,250. Right? And purchases raw materials. Purchase raw materials 394 600. 394 394 600. Okay. And finished goods purchases, huh? They are adding purchases also. Cost of goods, so purchases. Purchases of 21,700. 21,700. Right? And return of purchases of raw materials 16,400. Raw material return outwards. RAT or in return outwards. How much? 16,400. 16,400. Right? And carriage inwards on purchase of finished goods. Carriage inwards. Carriage inwards and 1,500. 1,500. Right? And wages factory. Right? Wages. Wages factory operatives, right? This will come to right? This will come to direct wages supervisors. Wages supervisor, vices. How much? 152,000 plus 12,000. 152 plus 12, right? 164, right? 164. Operatives 297,000. 297,100, right? 297,100. Office staff 108,700. Office staff 108,000, 8,700 plus 4,300. 113,000, 13,000, right? And 13,000. And general expenses 160,000. General expenses 160,000. General expenses. Expense, right? 160 divided by 5 into 3. 96,000. 96,000. General expenses expenses 50 64,000. That means into 2, right? 160,000, 3/4 and 3/2 has to be apportioned, right? General expenses has to be apportioned 3/5 to the manufacturing section and 2/5 to the P&L, right? For the administration. General prime cost 366. Factory machinery this is premises cost, premises cost 366. Factory machinery at cost, okay. Premises cost, also. Premises cost, building. Premises cost 366. Building. Premises cost at 366. 366,000. So okay. 630,000 capital account, and drawings account. Drawings drawings account 96 750, 96 750, right? Trade receivable, trade trade receivable, trade payable, trade payable, trade receivables 76 150, 76 150, right? Trade payables 41,500, 41,500, and interest free short term loan, interest free free short term loan, short term loan, how much? 50,000, 50,000. Bank overdraft, bank overdraft, bank overdraft 30 to 100. Loose tools, right? Loose tools at valuation 21,000, 21,150, right? Loose tools, right? We had to say loose tools, 19,050, 19,050. 21,150 loose tools, loose tools, right? Then 21,150, 21,150, it is the carry down balance. This is minus 19,050, 2,100 to manufacturing account, right? 2,100, 2,100, right? Thousand. Okay, so we have completed the we have posted all the things and we have done the correction. So now we have to what you call balance it, right? Can you do the balancing? If you do the balance, it's okay. Okay, 72,000 minus 43,200, right? 28,000, 28,800, right? 250,000 minus 147,600, that means 102,400, 102,400. If we add 102,400 plus 28,800 plus 366,000 plus 19,050, 516,250, right? Should be like that. Here we can do our balancing part. Opening stocks 49,500 plus purchases 294,600, right? Returns 16,400, right? Then it will come around 427,700 plus or minus closing stocks of raw material 41,100, then 386,600 is the material consumed, direct labor, then prime cost is plus 297,000, one hundred 683,700, right? We have to see the labor cost, labor wages, factory supervisors 152, factory supervisors 152, right? And factory overheads, okay, overheads, right, 19,050 plus 25,600 plus 164,000 plus 96,000 plus 2,100 plus 28,750, then comes to 335,500, right? 335,000 plus 683,700. That means 1,019,200. Right? From that we have to deduct 31,250. Means 987,950 is the cost of finished goods. 987,950, right? Okay, here 987,050 plus 63,100 plus 21,700, right, plus 1,500, 1,74,250 minus 59,100, okay, that means 1,015,150 has to be deducted, right? Here they says 1,246,850 minus 12,250, 1,234 minus 1,015,150 means 219,000. 19,450, right? From that, if you deduct 113,000 plus 10,800 plus 64,000, 187,800. You have to deduct it, right? Minus 219 and 450. 31,650 is the net operating profit. Net operating profit, right? Here net operating profit 31,650, right? 16,300 plus 41,500 plus 50,000 plus 32,100. It also comes to 139,900. Okay, right. 630,000 plus 31,650 minus 96,750, right? 564,900 plus 139,000, 704,800, right? So here 41,100 plus 59,100 plus 31,250 plus 76,150. That is 207,600, right? 600 plus 516.250 is 723,850, right? The difference is 704.8 is 19,050. 19,050 is the tools, loss of tools. 19,050 loss of tools I have put here. I have to deduct that 19,050, right? So 335, it is not an expenses. 335 335.5 means 316.45, 316,450 has to be added, right? Then 683,000.7 plus 316.45 is 1,000,015, 1,015,150 minus 31,250 is 968,900, 968,900, right? 968,900, right? Then 1,074,000 250 minus 19.05. It is comes to 55 and 200, right? Plus minus 59.1, 900 and 63.1 plus 968.9 plus 21.7 plus 1.5. It is 51 minus 59.1 equals to 996 point thousand, right? Then 1,246,000.85 minus 12.5. It is it's to 1,234,600 minus 996,100, 238, 238,500, right? Minus 187,800. It is equal to 50,700. 50,700 is the net operating profit. 50,700. 50,700. Right? 50,700 plus 630,000 plus 96,750 equal to minus, sorry, drawing should be deducted. Okay, 630,000 plus 50,700, right, minus 96,750, 583, 583,950, right, plus 139,900, right, 583.95 plus 139.9, that is 23,850. 723,850. 720,850. It is balancing. So I have taken that this one 950. That's what that problem came. Total, here you say total liability. Total assets. Right? This is the answer for this. Have you understood this one? This is tools, lots of tools, loose tools. I thought I understood that lots of tools, because of that only I have put here. That is the difference. Now it's okay, it's balancing, and I hope you would have understand the how we can prepare the manufacturing account. And if I hope to see you in next class. Now I am concluding this class, and I hope to see you in next class. In next class also we are doing some more manufacturing accounts for your better understanding. Thank you. Bye.